the coin, right? And we see what we're finding that we know how to find these pumps, right? But that pullback, we have two big wicks here that pull back, right? And these are these here. And then when you put that kind of into perspective, that is the that's kind of where the the leverage side comes in, because this is the pullback. So when we take a look at this a little bit closer, we know that on average, and I like to go a little bit further just because what could happen. So we're looking at about 13%, right? Might as well say 14. Now, what we have to do here is we have to dig in here and then find the way to eliminate these, right? So a lot of times when we have moon resets, stuff like that, it's so that we avoid these scenarios. That's really what we're trying to avoid, are these wicks, right? So once something happens, right, we should eliminate this wick pretty easily. But this wick right here is going to be the one that we're kind of like focused to see how we get rid of that. And then our entry, right? And remember, because we still have to put an entry together here. Our entry point is going to be somewhere in probably this zone here, right? So this is probably going to be our entry zone here somewhere. I would say top of that candle right there, or even here, right? So now we have to kind of piece together, first of all, getting rid of that wick, but secondly, from where our entry is to the next move, it's about 10%. You see. So this is where we have to sharpen up this entry box, and we need to get that, down in this level here, because what happens is you have to say to yourself, okay, if I have a 5% move on a pullback, right? Then what happens is that means, so now if you multiply your leverage, like leverage is just multipliers, right? So if we have a 5% pullback, that means if we multiply it with a 10x leverage, we're looking at 56%, right? So when we have that 56% pullback, that's where this is a very touchy coin, right? So, but we are looking on a 4-hour time frame. But when we dig in a little deeper, we'll be able to chop that up a little better, because the candles will become very minute where we're looking. But this kind of gives us an ideal here where we have to kind of like, this is just kind of like how we look at it and say, okay, how do we build a long entry here, right? Especially if you're doing something like $1,000, right? You don't really need a 10x leverage here. You would probably go 5, right? Because even on, and this is how we calculate the other side, right? So the other side is on an upswing to where we're going here. The upswing is about 80%, right? So that's 400% on a 5x. So that's where, understanding what we're building here. So this is a 5x, right, would be equivalent to 400%. So that's,
And that same 5x would stop me out at what?
well, you would close out on that blue moon.
Gotcha.
Yeah. Or you would run your stop loss back, and let's say you're hitting this highs, and then you could see here that you have a previous level here, right? And then you could put your previous level stop loss at that area there, right? Which ends up not hitting, and then you get the second green moon, and then the next blue moon. If we take a look here, happens here. So you would go to here, right? Which is let's see, you're working about 90, so another 20%. So times 5, 100%. That's a possible 500%. If it goes back the other way on you, 300%, right? The middle ground is if you take that blue moon, you're 400. So you have a 300%, a 400 if you take, a 500 if you let it run, right? But that's where we kind of live on the low end and say 300% there, right? So 5x here is going to give us at least a 300% move after all said and done. So that's what makes river such an interesting coin, right? Because we can get to a level here where trading into this momentum, right? We can get what we want out of it, right? And every time this river reaches red and starts to head up into that green section, right? So another thing we can do here is that, because it's such a feisty coin, that we can actually roll over here and say, okay, you know what? We're gonna focus just on the green moon, right? Which would be one tick past. So what I'm gonna do here is I'm gonna go past one tick on the green moons, just so that we can kind of have an ideal of, like, extra time here to see where we can adjust. Because right now the way it's set up is that once the 4 hour heads up, we start looking for that position, right? But I think you can't do that on river, because river has um, a very tight price action, and it like literally it flux really hard there. So if we wait for the green moon on the 4 hour, right? So this is where we start adding steps. So originally, and it's not the trade that we want to do, the 4 hour up, still works on a lot of trades, but when you test it on a new coin, you might have to adjust add a couple things to it, to where this, instead of it, it's the 4 hour up, but with river, you'd want the 4 hour green moon. See what I'm saying? Because it's just the wicks are that's too much of a range where we can't trust that right now, right? So now we got to kind of look at this a little bit different, which we'll do right now. In the meantime, with this type of trade, we can also start throwing in the fact that we can start looking at shorts when the blue moon comes, right? Or the 4 hour starts to head down, right? So here's your 4 hour here, and I'm just going to kind of move this across. This is when the 4 hour starts to head down. All right, we can see it here start to break down in this section here. Boom, 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 boom. There's this move down. And then take a look as far as, like, every time we get that 4 hour move down, what's it look like for this coin? Because it's pretty much any 4 hour down could give you a short position, right? Let's see. We'll take a look at that too while we're. That way we have an up and down on the same type of trade. All right. Okay. So let's see here. So we know what we're looking for. We want the 4 hour hit the bottom, start to come up. We want a 4 hour green moon, right? That starts the first trade, pushes up into positive volume. We get a couple moon reverses here, and then on the next blue moon, we start looking for where we have a pullback option, right? And this is also another way to look at river, as saying, okay, maybe if I'm playing the short, I play the 4 hour moon off the reversal, right? We'll see how that plays out there. I'll mark this one real quick. So this is the blue moon reset. Alright. We can actually have the blue moon reset here as well. let's see here. So I think the longs, like I said, is we're getting the green moon. We have the 4 hour up. There's a green moon, right? And this one is here too. So let's get this one locked in real quick. We gotta set this up to where, and we'll take a look at another coin too. That's a little bit same scenario. But a river just needs a little more attention to it. Alright, there's the volume there. And what I'm looking at right now is everything's a 1 2 3, right? So always kind of keep the fundamentals in your head that you're gonna have a 1 2 3 move, right? And right here, what I'm looking at is that after we have these, these pullbacks, here's a green, there's a blue, green, blue, and then we have the big drop. Now when I have green, I'm looking for blue, green. I'm looking for that second move here to kind of like see if it's holding a pattern for itself right there. And then here we come down, we get a green, blue, green, and then that's where we would go into our short position. So what I'm doing is just trying to like, find the simplicity to the 1 2 3 move, right? So when you look at something, always give yourself, use the 1 2 3 in your head, so that way you're always staying with the rhythm of the market, right? So remember, 80% of the traders are going to buy the retest, right? 90% are looking for a confirmation of a breakout before they enter anyways, right? So the 1 2 3 is always going to be the part of the trade that puts you where, it's at least stopping you from jumping in early before you assess the entire type trade, right? And that's what I'm looking at here. So I have a yellow moon, blue, and then my green, small pump, right? Now I go back, I get my green, blue, here's green, small pump. Then I go back, I get my green, blue, green, there's my next move. Green, blue, green, here's my next move. Blue, right, green, blue, green, right, here's my next move in here. So normally here, and another thing that I'm looking for is like volume, right? So here, if you look at the moon indicator, right? What I'm looking at is, if you look to the right, there's levels here, right? So a lot of times, what we do is kind of where, if you're doing, let's say, lower leverage, longer positions, right? We'll look over the time frame of the coin, and we'll look for just like almost like how you make a channel, right? So you have your channel, and then we go to the lowest channel that we've seen, and then take the highest one, which is here, right? So, and this will create a thing. So we have our lowest level here, we have our highest level here, and then you can see here how that's the middle level, right? So now that I have those, I'm kind of looking over, and then I kind of I'm gonna bring it down to a more average low, which is about this area here, right? So now, let me open that up there. So now what I'm doing is I'm looking at its average low percent of volume that it starts to see, right? And it looks like it's about 28. See what I'm talking about? About negative 28. And this is these peaks here, right? These peaks that normally hit in this area here. Now this is a bearish market, so normally 28 to 30 is our low point. So this is about average for a coin. So it's still playing inside of the rules that we're going to have for most coins. That once we start hitting 20, 27, 28 area, it's a low point, right? Normally we want to start looking at around 27, which is about here, determining that it's exhausted and wants to make a move up from there. So that's kind of where we can look across, and when that happens, um, we can start looking for the bounce or the return off that. So it just kind of lets us have a little bit of lower section. But any green moon coming after a big dip, is going to have a better odds of growth, right? Meaning that once we get to below the zero, it's just and this is just basics where big money or the market makers, they're not going to buy in the middle of a channel. They want to buy the bottom of a channel, right? They want to see how low it can go, and then they want it even lower, right? They want to make money. So with that, we always look for that. That's why having the double move is so important, because it just lets us know that there's always going to be a little bit more of a move down prior to anything that happens, simply because the money wants more opportunity to make money. But this also opens up the opportunity for when we're trading to do a leverage like a 5x on a coin that has huge possibilities, right? So this is where we want to build from here, right? So we have our basic 4-hour ups here. Green moon, 4-hour up, green moon. Once the volume goes positive, we kind of wait for it to come back down. Green moon, we're going up here. Green moon, that's our entry. Wait for the negative. Wait for the coin to go below positive. Here we go. Up, green moon, that's the yellow. And then we're waiting for the volume to go. So we don't need these here, because we wouldn't be using these trades on this particular coin, simply because we need the volume to go negative, and then that next green moon is what we're going to play. So these are the boxes that we would play here, based on how we're going to run river. Let's see. All right. So now we got to jump back to February 1st. Let's go down to a 10-minute. Actually, you know what? I want to look at the 1 hour. All right. So February 1st, we know that we're getting a buy signal here. And that's what I wanted to do. I'm going to add a indicator here that I'm not running right now, but we have price action tracker 2. Okay. So now the price action tracker 2, and I'm gonna show you how to break this down real quick. All right, so Ed, you use this. You're using tracker 2, right? So what I want to do here is just make some adjustments real quick, and get rid of some of these in between sections once we have it. Okay, so here's our 1 hour. Now the one thing that we were talking to, we were digging in with Young was, he likes to have a 1 hour green moon, right? And this is where volume, right? So I'm just going to mark the 1 hour green moon here, because what I'm trying to do is build a step-by-step pattern that I can use for this coin. And we're going to jump real quickly to another coin right after this, because I'm looking for a momentum trade, right? And I'm thinking, here's the green moon. Two green moons there. Let's see here. Green moon, signal, next green moon right here. There we go. Alright, next green moon here.
AC. So
Yes, sir.
as of right now, we're looking more like a long position trade,
So
like on a sub account trade.
Yeah, I mean, you could. I mean, so the reason why you have sub accounts, right, is two things, right? One is if you're playing a long position with something like a 5 or 10x on a trade, and you're playing like the weekly and the daily, right? So that way, if you're during that time frame, that might take a week or two, maybe even a month. But during that time, you might come across, you know, higher leverage plays on. Let's say you're trading Solana, right? And while you're trading Solana, you bought the bottom, and then you're going to let that run until we get to wherever we're going. Kind of like our XRP, right? So XRP was we bought at $1.30, and we're running it to until we get to 2.30, right? So that we
Right.
have in a sub account because during that time we're still going to short it, and higher leverages, and we're still going to make trades on the main account. So sub accounts are where they you
Okay.
can yeah. So on this, if you're going to play a long river position, that would be daily, weekly, stuff like that. That would be sub account, right? But I think this what we're building right now would be the main account type trade, because even though it seems
Uh-huh.
like we're doing a 10x, we're only doing 10x because it's a volatile coin. You know what I'm saying? If we did long on this, it'd be like 3x. That's something we put on a sub account, and that'd be different time frames, right? That'd be the weekly and the daily.
Okay.
Yeah, because right here we're just trying to what I'm looking at is the options for um, a very simple 4 hour green moon, 4 hour up, and then once we get a signal, looking into getting into a position on here, and we're gonna jump out. We're not gonna spend. We're gonna look at this really quickly just because that would be here. It's such a volatile one that I kind of want to get to where um, we're looking at another coin the same way to see the difference, right? And what I'm doing here is when we get the signal, I'm going to the next 1 hour green moon, right? Just so I can see, how we can, um, get rid of these wicks that are happening on here. So here's a signal. So this green moon here would actually be this green moon here. All right, it would be one over. And just trying to get to where um, we're finding a basic, form. The river's going to take a little bit of time to dig into. I just wanted to kind of like take a quick peek at it, and then we're going to jump over to Solana or Doge, and break down the same type of trade scenario, right? So we have something to, um, you know, put against each other.
Compare.
Yeah, compare. So
Yes.
here, this is just the 4 hour moon with a 4 hour up green moon. Then this is the next 1 hour moon. So basically doing a 1 hour moon reset, right? It's putting our entries, we're kind of in the same little scenario here. Like we're getting here, but we haven't eliminated that wick, right? So that's kind of a concern for me. But at the end of the day, if we do get wicked out there, right? And so what I would do here is, now that I mean, with that, we're just looking at the way this is playing out, right? So let's say that we get a buy signal here, and the 1 hour green moon hits, and we have a buy signal here, right? And we already know that this is a volatile coin, right? So let's say that we're playing a cluster trade on here, right? So our cluster trade right out the gate, from this point here, we already have a cluster situation that has, pretty much grown here. And, based off everything that we're seeing, these previous low points here, because we have a low here, we have a low here, right? So most of the time, what we're going to do is we're going to respect not that lowest low, but probably this next low up right there, right? Right out the gate, just saying to ourselves that we're going to go ahead and respect that low right there, that second one that came down, and that's just kind of like giving ourselves the greedy entry, right? So that would be our entry there. So now when we do that and we put our, measure that out, right? Meaning that setting that up to our hit and then going to our stop loss, right? Now we know that that position right there was about a 3.4, right? So now I'm going to put that in there. I'm going to put a 4% pullback. just so that we have that on record. So 4% stop loss hit. All right, so that'll be there, and that's kind of what I'm thinking would be the basis of how we run this trade here, right? So that kind of go into the next one here. Here's the same scenario, right? So we get the trade that we want is here, and we get the 1 hour moon here, right? And if we built out a cluster trade, right, our cluster trade would say that this is our low position, and that's our high position, right? The moon would trigger a buy position here, and then we would be looking for an entry here, right? Now we don't get this entry here unless we clean this up a little bit, but that's how that would play out. You know what I'm saying? It's because we're basically protecting this pullback here, because we're taking the greedy entry versus the called out entry, right? So let's move over here. And this scenario here happens like this. So here's our cluster. Here's the green moon call out, and then our pullbacks would actually be to this zone here. This would be our cluster. So this is where our entry would be based off of this pullback. This would be the entry of the green moon. Right, and I'm just going to turn that green real quick. And then what happens is this one we do get the pullback. You see what I'm saying? It does hit. So I have to do a little more like live trading on this. But you see right there, we get that pullback. Now I'm just going to measure that out real quick to see what our stop loss would be on there. There we go, and here we go again. We're about 4%. So we could just say a 5% pullback on there on that cluster. That would be our stop loss right there. So we got about a 5% pullback on there. 5% stop loss. Okay, so that's what we're dealing with when we deal with river, right? But then again, when you do have these moves, right? So you gotta, we get into here. I mean, right? Currently, that's a 32%. That's 150%. So you're doing $1,000, right? That's not a bad trade. So we're gonna come back and take a look at this. What I want to do here is, so Joey, is that making sense to you? Does that make sense?
Yeah. Okay. So like I get all that, and the part where I'm like struggling, I can't wrap my head around it, is like, so we got all the boxes and all this stuff charted out of the stuff that's already happened. Like,
Mhm.
how does how does how do those boxes or the pattern play out in real time? That's where I'm not making the connect.
Yeah. What happens is, so this is kind of like, all right, and this has been forever, right? Where people, when they see something that's already on a chart, it's always like, well, how does that play out in the future? That this before this happened, before everything that we went, so before the 4 hour RSI went up, and before there was a moon, right? What we just charted out wasn't there, right? When it happens in real time, it's going to, it's called the law of average, right? Just like we looked at these three charts here, right? We have the three trades that we just looked at, that we kind of like charted out, would be where the same thing is, we're looking for the 4 hour up, and the buy signal, or the strategy one, is the 4 hour green moon. The entry is coming off of when we get a 1 hour green moon. So here's the entry, right? The entry would be strategy two. That would be the 1 hour green moon. And once that happens, we would then put our entry on the lowest target of the cluster that it's currently in. Right? So let me see. All right. So this is where, so I know it's like, it's hard to explain, but what you're looking at, like what's in these boxes here, it exists because it's repeating a pattern, right? And it's not gonna. It has basically the same results over and over, right? The only difference in the results is they're slightly off on their on people, right? Sometimes they're gonna panic and sell more than before. So what we do is based on what we've already seen, the history of how it runs. Like we could go back and print this out, right? So let's do this. All right, let's say this. Now, based off what we just seen, right? Just so you understand, the box that we put here, this is a cluster, right? A cluster is if currently, let's say we were looking at this and it was a live trade, and currently right now we didn't have any data, and we were right here in this yellow box, right? And when that yellow box hit, which is right here, I'm going to go ahead and turn this purple and make it big. So right there, all that's happened before anything else that comes after that purple box. So everything after that purple box doesn't exist, right? So all this over here does not exist. Okay?
Right.
The only thing that happened for us to even be looking at this scenario is that this yellow box here represents that there was the 4-hour green moon, right? So the indicator hit a 4-hour green moon. That's all we know that's happened so far.
Yeah.
Right? Now, that's just a live trade. So now that we have a 4-hour green moon, we have to wait for the next trigger, which is going to be this line right here, right? So this line right here, this is going to be where we have a 1-hour green moon reset, right? And what that basically is that when the yellow line hit, when the 4-hour moon hit, right, we're going to wait for the 1-hour moon to go blue, and then this green line here represents when it goes back green. Okay, that's what this green line is right here. See the arrow? When that happens, the price at that time was up here in this section up here. It was growing. It was about 1444, right? Now, what we do is we're determining that this coin moves crazy. So now this yellow box here, I'm going to turn it white. Now inside of this white box, this is going to be what we call a cluster or a consolidation box, right? Which simply means this, is that we're going to look at the lowest areas that this has hit, right? And this is, so currently right now we're only to this green line, right? Everything else past that green line doesn't exist, right?
Gotcha.
So all we know is that before that we had this red first line, we had this next lower red line, right? And then we had a third red line here, right? Now currently that price is above that line, those three areas. You see that? So that the red lines have hit 1331. That's the lowest. And now we're spiking up. So what we do here is, because the way we're looking at this coin after looking at how it repeats it, so this white box here could represent what we call, if you look at it, what most people call where it's building momentum, so sideward action. um, uh, I call it a cluster because it just clusters up and down. It's a parallel channel. So this is where everyone is looking at these charts as they go sideways. And one thing that people will look at is that a trade that a lot of people will make is a breakout, meaning that when it breaks out of this resistance from the top, right, it then looks for what's called a retest, which would be touching this resistance, and then people would play that next move to the upside, right? So that's a 1, 2, 3, right? All depending on what time frame they're on. So right now, we are actually in the breakout of the resistance. So most people are going to be putting their money back down here on this area here, because they're going to expect this to actually become the retest. Okay, and we'll make this one orange here, right? So that's the retest entry. So right now, the people who are watching this and they've seen the consolidation go sideways top to bottom, they look for a breakout, which is happening now. They're going to look for a retest, and then once the retest happens, that's the trade that most people are going to be looking to get in currently. You see what I'm saying? So
Mm-hmm.
that's a basic
And
trade.
what time frame is that?
It's a 1 hour.
What?
So that's what most people are going to be looking for is the retesting of that 14, right? Now for us, we use that same cluster, right? And we're not looking for the breakout of the cluster. We're looking for the early entry on the cluster, right? And how we tell that we're going to get the breakout, this section here, that this is basically what happens is this is what they would be calling wave one, right? And this would be wave one is also consistent with Elliott waves or stuff like that, right? So this is considered wave one. Wave two, which is normally a 50% pullback, and it can go from 50 to 80% pullback. That's wave two. And then wave three is normally the wave that is the biggest wave. So that's why when people do trades, they're looking for the pullback trade because wave three is normally either going to create a double top, so you have a target that you can aim for, right? And then most of the time, I'd say 70% of the time, it's going to break past that an extra 20 or 30%, right? But it's definitely going to retouch that wave one push, right? So that's where a lot of people, when you see a push like a breakout, you'll see it break out and then it'll double top, it'll pull back to here, right? A little bit of pullback because people are, they set their targets to sell at that point, and then it has a bigger move. Because that's supposed to be the biggest wave, right? So what we're doing here is before any of that really happens, we're looking for this bottom entry over here, right? So this up here, everything that's happening in this upper section here in the orange areas, this is basically normal trading that everyone's waiting to happen, right? What we're doing here is we're going with the volume, right? So the yellow box here represents where we see the 4-hour green moon. Then once we get that, the green line here represents when we get the volume that we want, which is basically the 1-hour green moon. Once we have those two items that happen there, what we do is we come back, and this is our cluster section. All we do on the previous section, which is everything in this white box, is we just look for the lowest pullbacks, right? This pullback happened here. This pullback was lower. That pullback was lower, and then that pullback, is the same height, right? So we would decide that we would put an entry at this level here, right? And that's just determined based off the pullbacks that happened. So which means is our entry would happen somewhere in this pullback zone, which happens to have what we get lucky because we have it pull back and we hit right here. Actually, it would be this candle there. So that triggers our entry point into this trade. That's how we would get into this trade, right? And then from there, we can see our pullback level was 5%. If we're running a 5x leverage on here, let's say $1,000, and we have on there a 35% stop loss, right? We survived this because we're expecting a 5% pullback. So we would calculate that into our trade. So we'd have $1,000 trade, a 35% stop loss, and maybe even more. It depends on how often these trades hit. We have to go back and kind of start measuring from here forward on what we're getting from this trade, right? Because remember, we're in a shit market right now. So whatever we're getting now will be twice as much when we actually get, the market turns around. So this is the reason why we see so many wicks right now is because the volume doesn't exist and retail investors are they have very paper hands, right? They're not good traders. So they always, they actually make the market fucked up for themselves. So we have to just kind of work within their fear, and then take advantage of those next moves, right? So this is where we would look here and go, okay, this would be our entry, right? Which would be that 13.25, right? Now it does pull back 5%. We'd survive that, and right now, if this was our trade, we'd be in here, and this trade would have gone for 31%, so 150% on your trade, right? So that's kind of what that is. Now, when we go back and we see the same scenario, right? So you go back over here. That's why we don't have a lot of yellow boxes, because what we're doing here is we're cutting out all the middleman boxes. We're just going with the highest probabilities right now, which is basically when you see this yellow box here, this is going to be the 4-hour green moon. Once that happens, we do the same thing. We wait for the 4-hour, or not the 4-hour, but the 1-hour green moon reset, right? Which is basically when this happened, there was already a green moon. It went blue, it turned green again. Now, when this one turned green, unfortunately, the price that it was at was $15.50. You see what I'm saying? So when that happened, we're not going to enter at that price. We're going to go based off of our cluster, which is our previous data at that time. And that would say that we would be setting an entry at that 1354 area. You see what I'm saying? This lower area here. Because that's all we have. That's what we're looking at. And right now that would be the basic. Now, unfortunately here, it doesn't pull back for us, it just runs. Right? So that particular trade we don't get in right now. The way we're setting this up right now, it's still early. Got a couple more. We got to go through this a little bit for about a week, and then we'll build something on it. But right now, currently, the way it's set up is we would miss this trade because it doesn't pull back for us. So our trade doesn't hit here, and we miss this long position that kind of runs up for us. Now, there are ways that we'll get in this trade here, but what we're doing here is we're just walking through the concept of repetition, something that everyone can repeat, right? This other part that will fill in the dots over here will come as people learn the basics, right? We don't want to cover too many steps in there because then people get confused. Like, well, I thought it was a 1-hour green moon. We're looking at a 15-minute green and right? So we're just focusing on the basics, right? So that way it's very simple. Same thing here. This yellow box, when we get a 4-hour green moon, this is what that triggers. This green line is simply the 1-hour green moon again, right? Same scenario we just saw. Very simple to understand. 1-hour green moon. There we go. And now when that happens, right, what we would do there, let me make that a little bit lower, is when we get that 1-hour green moon, let me see, that would trigger this right here, right? So we look at this, put you there, it would put us here where this candle would be somewhere in this section here, right? So it'd be about $8.20. Now remember, when we enter this trade, we're not going to enter based off of that. We're going to go back to our data, which is our clusters, right? Which means that at this current time when that actually happens, right, the only data that we have for this coin is that the lowest peak was that one right there, right? And then if we go back a little bit further, we can see that, we have a peak here. So if we go back and we see where it comes down and we build our cluster out, we have all these peaks that hit, right? See that? These lower wicks. Now this is inside of the here it is here. This is inside of the cluster, right? Because the cluster is when it hits a floor and it starts to bounce, it builds this cluster area here, which is just a parallel channel, right? Now, how we look at this cluster is going to determine how we decide, where we're at. Most of the time, what we're going to do is these big two peaks that try to break out, we wouldn't consider those part of the cluster simply because they were two giant buys, and we would be looking where it becomes more consolidated, right? So it'd be the top would be here, and then the bottoms would be, somewhere in this point here. and that's just because it's how we would look at this cluster. So this low level here would now say that this is the lowest peak that we have, because we're saying that the cluster started here. So based on that, the lowest level is this level here, 7482. So when the scenario happened that we get a buy signal with the green moon, then we would go back, look at our lowest point at that point, which was, instead of 820, it'd be $7.48. So then we would put a buy at that point, which would have triggered right here, because it actually goes back and it hits that point. So far, the way we're running this strategy is we're 2 out of 3 so far, right? Now, based on that, we can measure that out real quick and say, okay, well, what's our pullback from there? We pull down, it's 5%, right? Which is what we're expecting on the overall. There we go. So far, we're hitting that level. We're getting 2 out of 3, which is okay, because we're all we want to do is survive that. You know, a trade that you don't get in isn't a loss. It's just a missed trade, right? We don't care about missing a trade. We just care about losing trades, right? So now as we go forward, and if we're looking at River, we know right now that we're not going to go long on River in this particular scenario, because we're in a position where we don't have the pullback that we want, right? We want it to, you know, the 4 hour we need the 4 hour to come back down. So right now the 4 hour is bending, right? But we need it to go back into a blue moon, and then we need the next 4 hour green moon. And once that 4 hour green moon happens, right, then we'll take a look at the 1 hour green moon. Turn this blue here, because that's going to be our next buy zone. So we'll come back and we're going to take a look at this pattern the next day or two to see how that pans out, right? So that'll allow us to kind of see where we're at here. But on the overall, you know, if we're looking at this move here, theoretically, if we would have got in this trade here, we'd be looking at, let's see what the other ones did. What's the average here? About 98%, 50, 60%. Yeah, so the average on this trade is about 50 to 80%. So currently, we're only at a 30% level. So more than likely, this is probably going to push up to this area here, about 21 cents. And then that's where we'll see a pullback that we're looking for. But we'll know a little bit more as this plays out. So now that we're tracking it, we can see it. And this is where where the question where you say, well, what happens when it's starting to build, right? Well, that comes from us marketing it, following it, market, and then, you know, kind of like come across. So the next thing for us would be setting this up where we go to the River, we go to the RSI, we right click on the RSI, we go add alert, and all we're going to do here is basically, I'm going to put crossing, I'm going to go down to message, and I'm going to put here River, 4 hour RSI crossing. And that's just going to give me an alert. Let's see here. And I'm going to extend this out. 1 month, create. And now that'll be in my alert section. So now I got to go look back. So even if I'm not paying attention, I can go back, look at all these here. So here's a River alert here that happened on March 30th, right? And we locked it in there. Crossing 21, 29. So this lets me know it just popped in. It's ready to go. And now I'll be looking for it to show up in these zones here. So you see I have a 2 hour crossing on Solana. I have a Sol crossing on 4 hour, which we'll go look here. So we'll know, like, in kind of what you're asking there is like, how do we know what happens afterwards? Is that, you know, once you design a pattern that you're looking for, and you're designing, you know, strategy 1, which is a live trade, right? Strategy 2 is the entry, right? Once those things happen in the future, we will see how they play out, and that'll give us our law of average, right? So we'll know moving forward, now that we're tracking this trade, how it responds to the same things that we're seeing over and over and over. That makes sense? So we're going to look for
Yeah.
the 4 hour moon, then we're going to look for the 1 hour moon entry. We're going to then enter on the lowest part of the cluster or the consolidation, and then we're going to see how much it goes up. And then from there, as we repeat that over the next 4 weeks, we'll understand river. And that'll
Gotcha.
then that goes back to your first question, is like, how do we, what's the difference in the leverage? Well, once we get the data, right, we can get a little more accurate with our leverage. Right now, I'd be running maybe a 5x on there, because when you do get in the trade is worth 30 to 80%. So I mean, it's 100, and we're looking for 50% on our trade. It's averaging 150 to 300. So we should be all right with a 5x. I wouldn't push it. Now, as we build a little bit more and we get into the lower time frames, better entries, digging into that a little bit more, down the road, we'll be able to fine tune the entry to where you'll be able to do a 15x or a 10x, right? I mean, a 10x is 300% to, all the way up to basically, 1,000, literally a 10x. But right now, we just have to learn the basics of, like, okay, how do I protect myself, win all my trades, avoid bad trades, and just, you know, put in 1,000, make 500, put in 1,000, make 500. And then as you go forward, you're like, all right, if I did this on 4 different coins, I'm doing pretty well. Very low risk, good returns, right? And then as you start to get better at it, then you can take profits and then, you know, be a little more aggressive with, advanced trades once you get the basics down, right? So now what I want to do here is that we got River kind of set up. I know I'm going to come back to this blue box and see how it turns out. So now what I want to do is take a look at the same scenario, but I'm going to go to Doge. Alright, so Doge is going to be the same thing. So first thing we're going to do here is we're going to play the 4-hour moons, right? So we know that this is a 4-hour moon scenario here. And that's with the 4-hour headed up. I'm going to turn this yellow. Okay. And there's my moon. And normally these are to blue moons. So far this doesn't have a blue moon, so we'll stay out. Okay. And once again, I'm looking for green moons that are below. Remember, we're looking for below the positive line on the 4-hour, because we're looking for longer trades here, a little more profit in here. So this would be here. So this down below. This would be this area here. This area here. Okay. So that's our basic. There's a green moon below, green moon below, green moon below, green moon below. All right, so now I got to rotate over to the 1-hour. And the 1-hour moons are going to be here. Would actually be the moon reset. So here's our trigger, the square, the beginning of the yellow box. We're not going to enter this until we get the green moon, which would be here. That's where we'd actually hit that trigger. This one would be the same way. We wouldn't hit it till here. That's our actual trigger. Alright. And that's because when we get the 4-hour moon entry, we wait until the 1-hour moon resets, meaning that it goes from green, blue, green. If it's blue, we wait for basically we're entering off of the next green moon after a blue, right? So if it's blue currently when this happens, we just enter on the next green moon. If it's green, we got to wait for a blue, and then we enter on the green. So that's where these come in here. We'd be entering off these moons here. All right. to take a risk on the these boxes here are my other moon, my 2 hours. Okay, so we're here before. We got this. We got this. This one doesn't give us a green moon reset, so we wouldn't get that trade there. This gives us a moon reset here. Nothing there. Moon reset here. Okay, moon reset here. Okay. Alright, so now if we look at the same scenario that we just went over with River, we play the same scenario. We'll see how this is kind of playing out. Same thing. Once we get that moon, it would give us a buy section here where we'd be looking to buy. The reality is we would play the cluster box, and then we end up hitting that right there. So it does drop down into our cluster trade. But it goes, that's a big pullback there, right? So we'll have to measure that real quick and see how much Doge is playing out. That's not too bad. So here's the difference, right? So here's Doge. If we take this entry here at 89.81, this pullback ends up being 2.1. So I'm just going to 2.1. So let's go with a 2.3% pullback. All right. Now I notice the difference. Like, so in River, if we see in a wick like that in River, that'd be about 30%. Right? Now that we're in Doge, it only goes back 2.3. See what I'm saying?
Right.
So now, if we're playing in Doge, we could run a 10x here, and we had a 35% stop loss. This is only a 23% pullback so far. So a little better odds playing this way. And let's take a look at the next section here. Same thing. So in this scenario, this is one of those trades we wouldn't get a trade into, because when we do, well, let's see, we get a buy signal here. Here's our one moon. If we were doing a cluster trade, right, our cluster would look like this, and then what happens is it kind of pulls out on us. We don't get the trade before it bounces here. It doesn't pull back, so it has an entry here. We would put an entry here, and it doesn't actually happen there. It kind of runs on us, so it doesn't pull back. It just runs up for us. All right, so we wouldn't even get that trade there. So we'd be looking at a different thing as we start to develop is how to get those trades correct. All right, let's see here. And Doge might be a little bit different, where we could change the cluster entry just because it doesn't pull back like River. So like here's an entry. Once again, if we were playing the River, you know, the cluster basics here, it would look like this sideways movement here, which would put us around this section here. So that would be the cluster for us. And once again, it would put our entry at a lower level here, right? So that cluster side isn't going to be something we're going to be looking into on Doge. It just doesn't have that scenario, right? It doesn't really work like that with Doge. Let's see here. And then it has its pullback to here. So now we can measure this out. If we did take this buy over here, we'd be somewhere about 93.42. The pullback on that is 2 points. So we're averaging about a 3% pullback. A little bit different than River. But not as, you know, when we see these triggers that happen, we're not getting the same scenario, right? So we could kind of change this up a little bit, and we can move it a little bit differently. So here with Doge, we'd play it like this, right? We'd go 4-hour moon and then enter on the 1-hour green moon, right? So let's see how that plays out here. So here's our 1-hour green moon. That's our entry point, right? Here the same thing. Here's our 1-hour green moon. So when this actually hits, since we're in a 1-hour green moon, we wouldn't do a 1-hour moon reset. So our enter would be there. And then down here, we get our buy signal. That's right there. We would actually enter there because we're not doing the 1-hour pullback. And these would come out. We're not doing the pullback. And then what happens is we'd be on this 1-hour buy. So when that happens, the green moon is actually already in. So our buy signal would be off of that move there. So I get rid of that. Get rid of this. I don't need the cluster. I just need the buy. Alright, so that changes it up a little bit here. Okay, no clusters, just buys. Okay. No clusters, just buy. And here it would be the only one. That looks like we would take an L on right there. Okay. Alright, so let me take a look here. So basically when this pops up, let me double check this. It should be a 4-hour green moon. Yeah, 4-hour green moon. Right there. 4-hour green moon right there. 4-hour green moon. 4-hour green moon. 4-hour green moon. Okay, perfect. Okay, perfect. Alright, now this is the only one that took a loss here. That was at a peak. Okay. So now we go back and kind of look at this basics. If we're going with just a 4-hour moon and we take our entry, that puts us in this section here. This one on the pullback is definitely going to be stopped out. This one here, we have to dig in a little bit more. All right, so here let's get into the how would we enter these trades, right? All right. So right now the way we enter trades is we're using the basic 10-minute time frame, right? Normally on a 10-minute time frame, a lot of guys will use or a 5-minute time frame. They'll use a 5-minute moon reset, right? So it's 5 or 10 minutes. So I'll jump over here to a 5 real quick. But these are the two ways that you can enter a trade. Same thing, different time frame. 5-minute or 10-minute, right? It'd go like this. Here's your yellow box, triggers by that 4-hour moon. Then at that point, you would say, okay, where's my entry, right? So the only thing you would do here is you would do a 5-minute moon reset, meaning that you would wait for it to reset. So currently when that happens, it's blue. You'd want to go to green, blue, and then you would re-enter there. So you need a green, blue, green, right? So that means your entry for this particular trade, that would happen somewhere in this zone here, right? If you're doing the moon reset there, right? A lot of guys will go based off of the next green moon, right? So this is where going over the trade and looking at it is how we would decide. Here we go, okay, let's do just the moon reset, meaning that whatever it is after the next blue moon, we text the next green moon, right? Which happens to be this moon right here, which puts us where we would be buying into this section here, somewhere in this top section there. Okay. Now we move on to the next entry. Set it up the same way. There's your buy signal, and the next green moon happens, and it happens right here. That would be your entry. And that's just based off this next 5-minute green moon there. Now we rotate over. So right now, if you're looking at entry wises, you'd be going based off once you get a signal of a 4-hour green moon on Doge, you would then slide into a situation where the next green 5-minute moon would be your entry point. So that's for that. Here, same scenario. There. Where's my next one? There we go. All right. Signal happens here. Next green moon happens here. That would be your entry. And one more. This is why when you put down whatever coin you're doing, you just put your little steps down on a piece of paper. So that way you're just repeating it, right? Next green moon happens here, which means this buy would be off of this green moon here, okay? And final one here. Signal happens here, next green moon happens here. Okay. So this trade right here, the first one we have, no matter how it plays out, it ends up with the same result. We're going to end up getting stopped out here. There is no spike in this area that actually like could, harness any type of win here. This one just kind of heads down there. So no matter what, we're going to lose that trade there. All right, so there's that trade out of there. That's one we lose. We want to stay with it, 7 out of 10. 6 out of 10 minimum, but you should be averaging 7 to 8 out of 10, right? This trade here, you always want to measure. Don't like give yourself the bottom candles. Take the worst entry possible. And you can see that would be the top of that candle there. So from this point, there is no real pullback here. So from here to here, there's no pullback. So pretty much safe on the stop loss. So the only thing we need to do here is just kind of like measure out how we did overall. Possibilities. This trade runs up about 10%, so it's about a 11% trade. We'll just put 10%. All right. All right, so now we know that that particular trade plays out. I want that on the top. Where's this? All right, top. Thank you. There we go. So this trade ends up being at 10% for us. So far so good on this particular trade. Now let's move forward. All right, so Joey, you see what we're doing?
Yeah, I see it.
Okay. So right now I know a lot of times, when people put strategies together, they always have all these complicated extras, right? We want to build something where less is more, right? Where everyone can just simply find momentum, right? So for us, it's going to be a 4-hour moon, right? And once we have that 4-hour moon, we go right into looking, with Doge, it seems to have a better momentum, and that's just because Doge is a massive coin, so it's not going to see the fluctuation like a coin like River. So we don't need to implement the cluster, lower level greedy entry here, because we have enough momentum and enough people in Doge that it doesn't have those type of wicks, right? So it'd be considered a safer type coin, right? So all we're doing here is every time we see a 4-hour green moon below the 0 line when it's in the negative, we're going to go to a 5-minute next green moon entry once we get that signal, and that's it. And that's where we're just seeing how that particular move plays out over and over, right? So now we can start tracking this. So this week, this is what I want to track, right? Is when that happens and we get into these, scenarios, we know where we're at. So this one right here, we have the trigger point here. The next green moon happens here. That puts us there. So now that kind of puts us where the lowest level that we hit is this right here. And then from there, we go to the upside. And all we do is we go to our long position tool. We click that lowest level. We measure to the upside. All right, once again, 10%. And then, I need to find that. There we go. We'd enter there. So we're working at about 8, about 9.5. So about, we'll say 9%, 8% on there. And then the low side pulled back about 1.3, right? So now we're going to mark this here and just put down here 2% on a pullback, so that we know that's a 2% pull. And then on the top, we're just going to throw this in there and we're going to put our 8%. There we go. There we go. Perfect. All right, there we go. So now we know that so far we have an average of 2 back, 8 up, right? We're not going to take the big one, we're going to take the lowest ones. We take the biggest pullbacks and the lowest pushes. All right, so now let's rotate to the next one. So now from here, we have a pullback that takes us to about here. That'll be our lowest move there. And let's see how this does on the overall. Okay, so right about there. And this is, we still have the 1 hour. See this green line there? That is, remember, that's our 1 hour green moon. So that's basically where we see that volume come in and we see that move happen. But we'll study that a little bit more down the road. That's just triggers it of why there's a pump coming, right? So I'm going to go down to this lower lever, push up here. So we're averaging about 5% up. Let me see. There we go. All right, 4% up. Pullback is about 1.6, right? So I'm going to mark this off again. So right now we're averaging a 2% pullback. And let me see how this plays out here. So, and target wise, we're averaging about 5%. Now these are going to change with market conditions, okay? So as the market starts to get better, we're gonna learn to stay longer. Right now, you're learning how to trade in a really shit market, and not a lot of volume. Everybody's scared. Everybody sells early, which is okay. But this is where you get real numbers, right? So when everything else happens, you'll have bigger rewards. All right, same thing here. Here's our trigger. Here's our green moon. Here's our entry. Pullback basically comes down to this level here, and then we run up. All right, so from here to here, we have a pullback of 1%, and we have a run of about 3.5%. We'll take a look at the overall. Yeah. All right, so we get a 3% on the push. Let me change that to 20. I want that at the top. There we go. Okay. Now my pullback is 1%. Okay. So now looking at that trade over and over, that's kind of like giving us the basics there where we're seeing that move. Now notice, we get that 1 hour green moon. There's a big dump that happens, and then, it kind of like bounces a little there. But that's where we're at right now with Doge. So now if I go back and I go to my 4 hour, right? If we're looking to trade Doge long, you can see that currently uh, we're looking for a bounce, another green moon opportunity. It's below the zero line, so it's there right now. We just need it to turn up. So we need this 4 hour in the next 4 to 8 hours, or even tomorrow at some point. We need this to basically, start to turn up in the other direction, and then we would repeat the process, right? So I'm just going to mark this off real quick with a blue box. So we're going to come back tomorrow and see where we're at with this coin, and then start tracking this basic move, right? But so far, what we have here is a very simple thing. We're averaging 3 to 8%. When it goes big, it goes 10, right? But 3% is a good number. So how do we make money off 3%, right? Is what we got to start thinking. That's what we've seen in the lowest level, right? That makes sense?
Yeah, I'm with you.
So once we know that our maximum, which is our lowest move, is 3%, right? We then have to calculate the negative side, which is the 2% move, right? So that means that if I did a 10x, then my 2% would be 20% down. If I did a 20x, then I'd be looking at about 40% pullback. That makes sense?
Yeah.
So now I have to kind of say, okay, where do I kind of slide in there, right? If I did a 10% and it did 3%, then I'm getting my 30%, right? Which is our target. We want to make 30% a trade. When this is where how we change this, right? Is if I'm trading this trade right now, and I'm saying to myself, man, if I did $1,000 on this, and I did a 25%, target, or even 20, right? And I did a 10x, I'm going to average that 20% on this trade every time, and sometimes it'll give me more, but that's where I'm at. Now, if I want to make $400 on this trade, let's say I do this trade for 2 weeks, and I get this trade about 3 times a week, right? So it's $600 a week I'm making, and I say, you know what? I want to make, instead of 600, I need to make $1,200 on this. So I don't change anything about the trade I'm about to do. I simply make the bag bigger. Does that make sense?
Yeah, big bags. I got you.
Yeah. So now I can comfortably make the decision to go, okay, I'm going to do a $2,000 bag, take 20%, right? I'm going to get some runners here and there, but now I'm very comfortable because I'm doing the lowest, average 3% move, and I'm taking, instead of 30%, I'm taking 20 on a 10x leverage. So now there's, yeah.
Say it again.
So if I have an average move of 3%, which is the lowest that it makes, normally it does 5 to 8, right? Which means if I was doing a 10x leverage, I can do 50 to 80% on this trade, right? The lowest one is 30. Okay. So what I'm going to do is I'm going to shoot for 20, 22, 23%, right? Something that I know is going to hit every single time. I'm not going to have an issue. It's going to be a clear winner. I'm going to get my 8 out of 10 with that for sure. Right? Now the risk is lowered, everything's lowered, leverage is set at 10x, right? My stop loss is 27% or even 30. I can do a 30% stop loss there, and I'm like, all right, I'm very comfortable here that this scenario is going to kind of run the way I want it to go. Very simple. So all I need to do here is, if I hit a trade or 2 trades, it's covering any stop losses if I lose a particular trade. But I'm pretty sure this trade is going to work out, at least 7 out of 10 times. Now, once I have the all that set up and I'm doing $1,000 and I'm making $200 a trade, $200 a trade, and I build myself up to where I see it actually doing what it's supposed to do, and then I get my bag to where the $200, doubles my bag. Now I'm at the point where, like, all right, now I'm going to start trading where, now that I've seen the results, I can do a $2,000 bag. Now I'm taking my wins up to 400, $500 a trade, right? That easy, no risk, lower leverage, everything's set up, and all I'm doing is rinse and repeating. Now the bonus is we can start, we haven't even got into the part where we look for when do we actually close the trade where it's exhausted, right? So now this is where we'll be able to kind of like synchronize getting more out of this trade. Once we kind of dig into it, and you'll see this week we'll dig into it. Over the next couple weeks, we'll develop to where we'll have a better idea of when we're going to hit five, the 50% to 60 to 70% runs, right? Those wins are basically double what we're already thinking. So if we hit two doubles out of our 7 trades, right? Right there, we're already doing a 9 out of 10 because we're only looking for 23% per trade. So we're hitting, 40 to 50% on trades. We're now doubling up our wins. See what I'm saying?
Yeah, I got you.
But we're playing very, very casual, very simple, and we're playing within what we see on the lower end of it, right? Now, the beauty of this is that once you've executed this trade over the next 3-4 weeks over and over and over, you will see the market change, right? Right now, I love learning how to trade and teach trading in the shit market because when you're at the bottom, volume is very unique. You see it, right? You see trades that are supposed to run and then they don't really do what they're supposed to do. And then you're like, oh, but you see the pullbacks. You see where the volume acts. When you start trading in the bottom, you start to realize that, the trade that does 30, 40, 50, 60% is now doing 60, 80, 100, right? So now you start opening up going, okay, I'm not going for 25% no more. I'm going for 35. And then you start hitting those and you realize that momentum is picking up, volume is picking up. Now you're going for 60 and 80. You see what I'm saying? That's where a lot of people, they start to increase the percentage, and that's where the mindset becomes a bad habit, right? Because they start asking for more percentages, right? So what we're going to do is we're not going to look for more percentages. When I see something going 30 and then all of a sudden I'm averaging 50 to 60% moves because I'm tracking even after I'm closed out, I'm seeing where it goes. Once I realize volume has returned, all I'm going to do is I'm going to go from a $2,000 bag to a $4,000 bag. And now I'm taking 30% on 4,000. Now I'm not. Even if the market doesn't go where it's showing its averages, its current law of average, I'm taking the lower part of it anyways. You see what I'm saying?
What do you mean by taking the lower part of it? You lost me on that part.
So I'm staying at a target of 30%, even though it's averaging 60. Right?
I got you.
Where people lose money is they start seeing the trades go higher. So what they do is they push their target higher. And that target doesn't hit. And then as people start to sell, people are more likely to sell than they are to buy. So it always goes back down to your stop loss.
Right.
When in order to make all you were doing was saying, okay, I normally take 30%, but I'm going to take 60 because I want to double up. So on 2,000, you want to make 60%. So you want to make 1,200. So you go for 60%. When what you should have done was just made the bad 4,000 and went for 30%.
Right. Because it's easier to hit that. I got you.
Yeah. But that's the habit that we're going to cover all the time because that's the difference in how people blow bags.
Yeah.
What's up, Jedi Master Buddha? Buddha, we're using BitNext, bro. Right? So yeah, I'll put that up for you guys for BitNext here. But that's what I wanted to kind of sink in because the one thing that we've done is kind of in the past is we talked about how the trades increase, but then what happens is we never talk about how to we'll cover it, but we don't instill it in the brain. That has to be the basic the common sense is when the market gets better, I don't go for higher targets, I increase my bag and I stay with the lower target. That's how you increase where you're going, right? See, a lot of guys, they do two things: they increase their bag and then increase the target. So when they lose twice as much, and they're really not. They're losing even more. They just don't know it because it's like it's not. They're not thinking about it. That's the difference. So what we're doing now is we're putting it into where it's like we're getting to where we're instilling it into the head so that people understand. Like, okay, yeah, when the market gets good, I don't. When I increase my bag, I don't increase the target. I simply go with what I'm supposed to go with. You know, that's the difference, and that's where we lost a lot of people on this because it's people always do that same mistake. And I'm gonna move this over for you, TikTok. If you guys, this is the exchange we use, guys. I'm gonna open this up for you. You can take a quick screenshot of that for you guys. But that's how you increase your bag, right? So we want to stay where we're focused on not increasing the bag and then increasing the target, but simply increasing the bag, period, right? And just keeping the same target. That's how you get success, man. All right, guys, man. If you want to get into the exchange, man, I keep forgetting, man. Just type in vccryptonation.com. vccryptonation.com. My bad. The connection for this vccryptonation.com. VC, yeah, that's fine. It uses an unsupported protocol. Okay, give me my side, man. With Microsoft Edge. But yeah, go to VC Crypto Nation, man. No, 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 no K. Don't KYC, man. We don't KYC, guys. No KYC. No KYC. Just you can go to bitnext.com. Just use the VIP pass, man. I'll give you the VIP code is JNZS right there. Snapshot that. That's the referral code right there. So when you use JNZS, no KYC, no verification. JNZS. That's for us in the U.S. and across where we don't want to. You don't need a VPN, and you don't need to KYC. Right there, JNZS. But yeah, so we're gonna cover this trade here, and we're gonna dig into that. But that's what they're repeating. So tomorrow we're gonna hop back on and do the same thing. Except tomorrow we're gonna see a little more data, and then by the end of the week we'll have the same data on that. So we're gonna track Doge and River, and we're gonna develop those two scenarios with the same trade, and that way you'll see the difference between a high leverage trade or a very volatile trade versus a trade where like Doge who doesn't have those pullbacks. So it keeps it very very simple. So that really is the
ABC. What if I think I did KYC on mine.
yeah. I mean you don't. So if you want, right, just so kind of like you have where what you can do is in the section where it says if you have two accounts, you can always like go in and delete an account, right? Don't delete it with your money on it though. Transfer your money out, um, and then from there you can basically um, make a new account that you don't KYC if you really want to do that.
Because what's the difference if you don't KYC or if you do? Because I might if I KYC'd it was I can't remember if I did or not. I don't think.
So the only difference is if you KYC. I mean, for them, they don't really care because they're not reporting anything to anybody. Um,
Right.
so it just puts you in a place where if you did that, then if you go to like um, if there's ever a time U.S. asks them for any information, right? That's just what they give out. You know what I'm saying? Right now, I mean, the way it's
Gotcha.
looking with everything, the way how crypto's kind of like coming out, um, it's not looking like it's a big deal in too many places, right? So we have it where everyone's getting to the park, and this is what you guys want to use right here. You can take a snapshot of that. That is the referral code, so there's no KYC. You don't have to KYC. But yeah, I mean, I guess it's what state you live in, man. Um, like I know in Texas, there's no capital gains. There's not it's kind of crazy all over the states. Where you're living, what you have in there. But yeah, that's the only thing KYC is like if you pull up your
Okay.
reports and stuff like that. So and also what
All
state
right.
you're in. I know states are changing their laws here, and then we have the entire federal where right now they're pushing where they're not even looking for um, crypto gains anymore.
Yeah, I don't even know what the law is in Ohio. That's where I'm at.
Yeah, I pull it up, man. But like I said, I mean, a lot of us don't KYC. But I also don't think that for BitNex, they're not looking to really get into the U.S. They're kind of doing their own thing, and that's where you see in the
Okay.
bigger exchanges like Coinbase and all them guys, and that's why they're having such problems. I mean, they're just Coinbase is terrible. I mean, it really is terrible. I mean, Coinbase, I don't even understand it half the time. Like most of the time, Coinbase would be in a situation where